speaker is Jake Bernstein. Now, Jake is an internationally recognized futures analyst, trader, and author. He has written more than 41 books and numerous research studies and newsletters on futures trading, stock trading, trader psychology, and economic forecasting. He is the publisher of Jake Bernstein's weekly futures trading letter, which has been in continuous weekly publication since 1972 and has been a guest on numerous business radio and television shows. His market advisory services are subscribed to by floor traders and professional traders, money managers, and both new and experienced traders and hedgers throughout the world. It is my distinct pleasure to welcome Jake to the room. Good morning, Jake, and welcome, and thanks for your time today.
Good morning, Raleigh. Good morning, Yana and everyone. I appreciate the opportunity to be here. Can everyone hear me okay? Yana, can we get my presentation showing on the screen? Thank you. So I don't see my presentation yet, and as soon as it comes up, I'll be ready to start.
Okay, Jake, this is Raleigh. Let me get with Yana here quickly, and we'll make sure we make that happen.
Thank you, Raleigh. Appreciate that. So in the meantime, I'll just ad-lib with you guys. I want to thank you all for being here. The fact of the matter is that, oh, there we go, that I have been trading for 44 years. I made my first trade in the summer of 1968, so that will let you know how long I've been around. I am a real trader. I trade practically every day. Today we've already traded 3 times, and so far all 3 trades we've made are profitable. We are out of 1 trade. I'm not exclusively a day trader, although I do trade on a daily basis as well. The most important thing I can tell, no sound. Okay, can everyone hear me? Okay, thank you very much. So, as I said, I'm a real trader, and I trade practically every day. I trade stocks, I trade futures. I do not trade options. I'm not an options expert like the person who was on here before me. One of the things that I will tell you more than anything else is this. It took me 15 years to learn that I need to trade with 100% rule-based trading. I will not use certain words with you or with me. In other words, I will not interpret anything. I will not use words such as looks like, such as maybe, such as I might, or I could, or any of that stuff. That simply doesn't work for me. I think everyone has to develop their own style. Or I think, or I probably, or looks like, which is my favorite dirty word in trading. I don't use those words. I don't use them with myself. I won't use them with you because they just are destined to get you into trouble. Now, I don't claim that what I have is the best stuff out there. I'm sure there's a lot better traders out there than me. But I do know this. Everything I do is strictly rule-based, so that 1,000 people looking at the same information at the same time will get the same answer without conferring with each other. It's not going to be like some Elliott wave stuff I've seen, no offense intended, where you get an Elliott wave chart and show it to 14 people and you get 7 different answers. That doesn't work for me because I'm not an artist. I'm a trader. So you can be an artist or you can be a trader. Today I'm going to show you some of my methods for being a trader that are clear, consistent, not subject to interpretation. And when you have methodologies that are not subject to interpretation, you are accountable. Okay? You have 15 different answers. That's possible too, maybe 20. What do I mean by accountability? I want to be accountable for what I teach you. I want you to come back to me and say, hey, it works, it doesn't work. If it doesn't work, we'll figure out why. I want to be accountable for showing you things that work, and you in turn have to be accountable for either saying, yes, it works, and you can't do it for some other reason like psychology, or yes, it works, Jake, you're a great guy, thanks for teaching me this stuff. My approach to all of this is very simple. It's based on the school of hard knocks. And so let me begin by giving you just a little bit of psychology and to tell you this. Before I became a trader, I was not an economist. I did not come from a wealthy family. I did not have family in the business. I grew up, in fact, in a very poor family. I was raised in my entire family lived in one room in someone else's house in the Montreal, Canada ghetto. And so I'm self-made. I wish I had had a teacher because it took me 5 years to learn how to trade according to the usual stuff that people teach. And then it took me 10 years to realize that what I was learning was worthless nonsense. And I had to unlearn it and have a new point of view. And so what I'm teaching you today is my stuff, and you'll find that it's not very similar to what you may already know. So maybe it's a breath of fresh air, who the heck knows. Before I became a trader, before I went into the business I'm in right now, I was a psychology student and worked at a mental institution in Chicago. It's very similar to the work I do now, except I get paid a whole lot better. So I am working with a mental institution, but hopefully the cases are not as severe and they're more amenable to treatment, and we don't need to use drugs. Of course, you will need to use drugs if you don't do this stuff the right way. So you're going to find that within my work, there's a lot of psychology and there's a lot of methodology, because the psychology is always the weakest link in the chain. Fortunately, we can get rid of the weakest link in the chain by having clear and consistent methodologies, which I will show you today. So everything I'm going to show you today is rule-based. Excuse me, I've got a little bit of an allergy. I'm speaking to you today, by the way, from my office in Santa Cruz, California, where it's summertime, of course, and we've got a lot of pollen in the air, so I apologize to you for that. Plus, I've done a lot of yelling and screaming and trading today, so my voice is giving out on me a little bit. So without further ado, and by the way, please interrupt me anytime you have a question. I'd rather take questions as we progress rather than wait until the end and lose people. So let me start out with a couple of quotes from Albert Einstein. Not everything that counts can be counted, and not everything that can be counted counts. Simple meaning, there are a lot of indicators you can use, and I'm translating this into market lingo. There are a lot of indicators you can use, but most of them are not useful. Indicators in and of themselves are always based on some variation on the theme of price. Most of them are backward-looking. They're not forward-looking. They're not leading indicators. They're lagging indicators. So when you open your trading platform and you look at your charts and you see there's 173 different indicators, and you say, gee, this is a great tool. The fact of the matter is it's not, because most of them don't work. Most of them are people's just favorite little special tools. They're pet tools, and they don't work, never have, never will, because they're not rule-based. And the next item, insanity, doing the same thing over and over again and expecting different results. I get a lot of email from people, a lot of phone calls, and people say, well, Jake, I've been trying to learn this trading for 7 years now. I come home every afternoon, and I work on the market from 5 until 8:30, and I'm just not making any money. So my question is, what are you doing? If you've been doing this for 5 years, 7 years, and you're not getting any results, then something's definitely wrong, and you're insane. So, yes, I am the author of All About Day Trading and 44 other books. So, you want to stop what you're doing if it's not working and re-examine it. I'm going to show you some things today that may be of help to you, may be of value to you. And let me say one more thing. Don't believe anything I'm telling you until you see it for yourself. Don't believe anything that anyone tells you until you see it for yourself. Because what may work, excuse me, for some people in this business may not work for you. They may have a particular skill, a particular knack, a particular je ne sais quoi, a certain quality that you don't have. I believe that if you can't teach it and you can't learn it, then you can't trade it. So let me go through a couple more things with you that are very important to me. And I'm going to try and go through these quickly so I can give you, excuse me, the methodology more quickly than wasting time. So what we're going to do today, I've already told you a little bit about who I am and why I'm doing this. I'm doing this because I enjoy this process. If you can come to me and you can say, gee, I changed your life for the better and improved your trading and you're happy now, I will consider that I've given something back. Because if you can't give anything back in this business particularly, then there's nothing in it for you. After you reach a point where you've made a lot of money, you say, what else is there? You have to give something back. The nature of the markets is very simple. They're very much based on psychology, as you know, and my trading goals and objectives are simply those, to be objective. I want to be totally clear. Who wants you to win? Who wants you to lose? Let me tell you something. I've given numerous talks at the Chicago Mercantile Exchange, the Chicago Board of Trade, and stock exchanges throughout the world. Most of the time, when I've been invited to give a talk, they put out an announcement and it says, Jake Bernstein will be here on such and such a day talking about this and that. Register to attend, and then it says members only. Why would financial education be limited to members only? Because members only want to get the jump, the edge on the general public. It's a very difficult game for the general public to win because they don't have the education they need. So the fate of the typical trader is that they will lose money. Today, I'm going to show you some things that hopefully will help you not only not lose money, but will help you make money as well. And so, and I also invite you to send me an email if you have any questions. So let's talk about what I call the trading genie. Let's say that you had a trading genie, and the trading genie could tell you all of this over here. What to buy or sell, when to buy or sell, the exact price to buy or sell within 2 minutes or less, the price to enter and exit, the target, the stop, the odds, the ratio, the complete track record, the upswing, the downswing, max consecutive winners and losers, and all the rest of this stuff which you can read for yourself. You don't need me to read to you. Well, in effect, this is really the trader's dream. This is what all traders are looking for. And I maintain to you that this is all available. The good news is that it is available, and it's there. All you have to do is figure out how to get it, which I will show you. And the second thing you have to do, believe it or not, is you have to, because if you look at this and you say this is too good to be true, I will tell you it's not too good to be true. It is there. The problem is that it's not 100% correct, and that's where people get messed up. You can't come into the market, whether it's stocks, futures, options, or forex, and figure it's going to work all the time. You know that. You don't need me to tell you that. But people get upset because they want things to work right away. The fact of the matter is, and believe me, I have mentored personally hundreds of traders all over the world. This is what I know. Most traders cannot sit through more than 3 consecutive losses. If you apply particular trading methodology and you lose money 2 times, you figure, hey, that's not unusual. The game's not perfect. Virtually anyone can lose money once and still stay in the game. Lose money 3 times, you're looking over your shoulder and you're saying, what am I doing wrong? What's wrong with my method? Lose money 4 times in a row and you're saying, what could I have done to not lose money? What's wrong with my method? Lose money 5 times, you say to yourself, this method is no good, I'm going to abandon it. But if you know the facts, that even the best trading systems in the world can lose 6 or 7 times in a row, then you're prepared for that. So Andrew says, as traders, we have to gather information. You have to distinguish, Andrew, between worthwhile information and worthless information. 98% of the information that's out there is worthless. I say it's worthless because it can't be proven. It has to be interpreted. So it's not a question of information. It's a question of quality information. If you go to the internet and you type into Google day trade, you will get over 1.5 million hits. There's no way that you are able to go through those 1.5 million hits and separate the advertising from the nonsense, from the rip-offs, from all of that stuff. That's the good news and the bad news about the internet and about information. And that is a very good point in terms of batters. Well, I will show you how to do better than 30%. So let's go forward. I presented you with the trading genie, with the concept, and you will see the reality. But before we do that, let's talk about a few things. I want to talk about why traders lose and why traders win, because you know what? I can show you methodology. It would take me 15 minutes to show you methodology, but I can't fix what's in your head in 15 minutes. So let me just talk to you a little bit about this. Everything needs to be objective, by which I mean I need a rule for everything. I must have a rule for everything. I can't look at a chart and say, I might want to buy it here, or I'll probably buy it here. I want to give you, buy it here, sell it here. This is your stop, this is your target, this is your profit maximizing strategy, this is your risk, this is the complete history. So I need a structured trading model in order to do that. My trading model is what I call setup, trigger, and follow through. So bear that in mind, STF, setup, trigger, follow through. I will not make any trades whatsoever without a setup, a trigger, and a follow through. So I would say if there's one thing that I can show you today that you can walk away with, if you understand setup, trigger, and follow through, I will immediately have changed things for you if you're losing money. If you're making money and you don't have a trading model, perhaps you will get even better. If you're trading marginally and you setup, trigger, follow through, I am sure things will get better for you. But you have to understand setup, trigger, follow through. You need profit maximizing strategies. Here's the thing. You can trade 20 times in a row and make money on day trades. And you're thinking you're pretty hot stuff. And give it all back on one trade. Give it all back on one trade. That happens, plus you will give it back even more. So it's not a question of accuracy. It's a question of being able to maximize your profit. If you don't have a profit maximizing strategy, you ain't got nothing. So we've all been through this thing about sufficient starting capital, the ability to sit through a series of losses, seeing the big picture, avoid micromanaging, by which I mean sit in front of the stupid computer and live and die with every tick. No, I should have got out. Why didn't I get out? I'm going to get out here. No, I don't want to get out here. Oh, let me look at the moving averages. What do they say? What does the ADX say? What does the stochastic say? You don't want to do that. That's absolutely ridiculous. One moment, please. That's absolutely ridiculous. You don't want to do that. And believe me, everything I'm telling you, I've been there before. I've lived it. I've made every mistake in the book and then some, and I've invented a few of them. So the key is I'm teaching you stuff based on real experience and real research and real track records. I'm going to show you some real track records, and you can take it from there. Let me go to the one question about discipline. If you've read books, if you read my first book, The Investor's Quotient, and I'm not trying to sell you books. I don't care if you buy my books or not. What I care about is this. Do you understand discipline? People say, Joe, no wonder you can't make money. You don't have any discipline as a trader. And Joe says, yeah, that's right. I need discipline. Well, where am I going to get discipline? Is it going to fall out of a book? No. Is it going to come to you from a seminar? No. Or a webinar? No. Is it going to come from you by laying on a psychiatrist's couch? No. Discipline comes from confidence. Where does confidence come from? Confidence comes from making money. Where does making money come from? Making money comes from structure. If you're making money, you've got confidence. If you've got confidence, you've got discipline. If you have discipline with a methodology that doesn't work, and you are losing over and over again with a methodology that doesn't work, and you have discipline, you need a psychiatrist. It's very simple. The normal response to losing money is lack of discipline. So to get discipline, you got to make money. To make money, you got to have structure. To have structure, you have to have methods that work. It goes around and around and around. So don't worry, I'm going to cut to the chase and give you some stuff that you can really use. So just hang in there. And what I'm teaching you here is what I really do. So I'm going to forget about this. We've already looked at that. And let's talk about one more thing. As a trader, you must always deal in reality. If you're not dealing in reality, you're making decisions based on what you imagine or what you think. If you base decisions on bad facts and interpretation and a lack of reality, you're going to end up going into Iraq thinking there's nuclear weapons, and they're not there. Even the things that we think we know about trading, we really don't know because we're playing the odds. So why engage in market myths and trade based on market myths? What is a market myth? A market myth is that traditional moving averages work. They don't. A market myth is sell in May and go away. it doesn't work. A market myth is buy at support. What is support? If support doesn't work, get a fatter pencil and make the line bigger so that your price will come down to support. Market myth, no offense intended. Elliott wave, Fibonacci, Gann, these are market myths because they don't have specific methodologies associated with them in most cases. Now listen, I don't want to make anybody mad. These are just my opinions. I have huge respect for people who can make money with those methods. But my question is, are they teachable? Are they true teachers and professionals in the sense that they know how to use these things and they can be taught? Or are they artists? Okay? I'm not an artist. I am not psychic. When it comes to the market, my interpretation and my psychic skills absolutely suck. On the other hand, I can talk to a person for 5 minutes and tell you if they're going to be a successful trader and give you really good odds. That's where my intuition comes into play. But I learned long ago that as a market psychic, I suck. So I'm not going to do that. And here's the last item. You know, living here where I do in Santa Cruz, California, about 45 minutes from Sunnyvale in Silicon Valley, we live here in the greatest technology area in the world. We've got something called computers. When I do some of my free traders groups in Sunnyvale or at some of the major corporations here, teaching their technicians and engineers how to trade, it just never ceases to amaze me that you've got all these incredible programmers there and they're not asking the question, can we test it? Can we put it on the computer? Can we look at the history? Do we know if it works? What are the odds? Where are the statistics? That's what I want to do because it seems eminently simple to me in this age and day and age of big data. So I can't trade anything unless I test it. So let me move forward and give you some examples of what I mean because I don't want to overrun my time and I do want to keep you interested. I don't want anyone to fall asleep. So these things don't work for me. And I stress, they don't work for me. They may work for somebody else, but not for me. Now, CNBC. If you read one of my recent books, I think it's called The Complete Day Trader 2, I've got in there what I call the CNBC trade. That works for me, but you have to know how to do it because it's procedurally based. I can show you how that works if there's time, but let's go on to something else. And if you want to, you can look at my book. You don't need to buy the book. Get it at the library and read about the CNBC trade. It's really fascinating. But these things don't work for me. Now let me show you some examples. Let's look at the track record. I know I'm going to bore you with the track record. And one thing I don't like is I don't like charts with black backgrounds because I can't see them well. Track record. If you take the so-called cross above the 200-day moving average in S&P as a buy trigger, cross below the 200-day moving average as a sell trigger, using traditional, I believe the CNBC trade is in my recent book, The Complete Day Trader 2. If you can't find it there, send me an email and I'll tell you where it is. Or I'll make a copy of the CNBC trade chapter and send it to you. If I go to the computer and I backtest and I ask the question, this whole idea, buying on a close above the 200-day moving average in the S&P or selling below on a close below, I run it on the computer and here's what I get. I get 29% accuracy. I get 8 consecutive losing trades, 3 consecutive winning trades. I get my average number of bars in winning trades and so forth. And so overall, I'm asking the question, is this a good method for me? If I'm looking at 29% accuracy, it sucks because I'm wrong 70% of the time. If I'm looking at the bottom line, total net profit, someone says, you know, it's made money. The answer is yes, it has made money, but at what cost? At the cost of an $82,000 drawdown against you before it makes money. And so, if this is something that you like, and you have the ability to sit through this emotionally and financially, this is a great method for you. But the track record says no. What are the top 3 to 5 questions that you will ask to see if anyone is successful in trading? Please ask me again toward the end of the presentation. And if I don't answer it, send me an email and I will answer it by email, okay? Because I just want to get through the slides for today. So let's look at the next slide. What if I took that same concept and looked at the indications that are most important to me? These are the things that I'm looking at, and I can't trade with 70% of the time being wrong. So what else can I do? I can go and look at the further statistics and analyze them just like I did for you and say, no, 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 don't do that. What if I did the same approach in an individual stock like IBM? Well, the bad news is it gets worse. We're looking at 18% accuracy. So again, this is not for me. Besides being grossly inaccurate, it loses money. I can't do that. Look at 44 trades, 18% accuracy, 8 winners and 36 losers. Please don't do this. Now let's look at another system, which I will teach you today. Here's a system with impressive statistics. 86% winning trades since 2002, 305 trades, average profit, $299 after slippage and commission, 21 consecutive winning trades, 3 consecutive losing trades, very short-term length of trade, and a bunch of other statistics. So for me, given the choice, this is what I want to do. Because I don't like the idea of being wrong 70% of the time. Now, I believe that if you have a system that is completely objective, then that system, whatever it is, stocks, futures, forex, my screen has not changed. Okay. Has everyone seen my screen change or no? You're looking at a slide that says compare at the top of it. Okay. Okay, thank you. So this is what I'm interested in doing. It took me 15 years to realize this. So I would say to you, from the bottom of my heart, cut the crap, okay? If what you're learning isn't crystal clear, unless you're really good psychic or intuitive, it's not going to work. Okay, I'm sorry. Can your system work for day trading? I have systems that are day trade systems, and they will work. This particular system that I'm showing you here, which I will teach you, is very short term. And here's the thing. What I'd like you to do is retain the concept, the underlying structure, set up, trigger, and follow through. I'm showing you the track record now to impress you. I want to show you the methodology, and maybe that will depress you. But the bottom line is, it's crystal clear. You always know what you have to do. You always know going into the trade what your risk is, what will trigger a trade, what will set up a trade, how to exit that trade. It's all specific. And you and I, assuming you know the rules, will come to the conclusion, the exact same conclusion every single time, unless I'm a bad teacher, unless my rules are unclear, or unless you've got a learning disability. So which one of those is it? Or unless you've got something else wrong with your brain. So let's go forward. Here we go. I'm going to show you this momentarily. This is the equity curve of that approach. This is the monthly performance. So again, by becoming an analyst as opposed to an analyst, and looking at the statistics, I know a whole lot. I know which month of the year is best for me. I know that if I'm going to start trading this new approach, I want to start trading it at the end of February. I'm not going to start trading it over here where there's a probability for loss. I'm not going to start trading it over here. I know that my best month is September historically. So I can look at these metrics in many different ways and get the information that I need to extract. There's a lot of things I can do with this because guess what? It's a rule-based, statistically based program. Let me show you a chart. And this approach that I'm teaching you is based on some very simple concepts. You may not like the length of trade, but if you don't like the length of trade, that's fine. You don't need to do the method. But if you retain the concept, This particular system is for the European currency, Forex, or futures. So what we're doing is we're trading the futures, Euro versus US dollar, or the Forex, Euro versus the US dollar. And it's based on three underlying concepts. So this would be a buy trigger over here, this would be a buy trigger over here, and this would be an exit. This would be a sell trigger over here, and this would be an exit of a short position. It doesn't mean anything to you because you don't know, am I going to trade live today? I've already traded live today. Am I going to trade live for you today? No. I wasn't told that that was part of the deal, but I'm certainly happy to trade live anytime, applying my specific rules. But in order to do that, I have to teach you my specific rules. Does that clarify? Does that answer your question? Okay, just one moment. I'm going to get a drink of water, so just hang in there, guys. I'm going to turn the microphone off for just 1 second, please.
Shut the fuck up. Idiot.
Okay, so let me tell you the system. It's really simple. We're going to deal with concepts that we know. I'm not dealing with things that I don't know. Remember what I said earlier. I don't want to deal with things that I don't know. What do I know? I know that in the European currency, there's a relationship between the opening price and the closing price on any given day. This holds true in any market. If the closing price is greater than the opening price, it means there's more demand during the day. It's a bullish indication. If the closing price is less than the opening price, it's a bearish indication. I believe there's a candlestick pattern for that. I don't use the candlestick. I prefer to keep things more simple. I don't really understand candlesticks, but Marilyn here in my office does. So when I use that first setup, in other words, I'm asking the question, is the close greater than the open? Is the close less than the open? It's a binary answer. It's either a yes or a no. If the close is equal to the open, then there's no fact, no information that we can use. I'm simply looking for close greater than open, close less than open. And I'm looking at that for a specific day of the week, Thursday. Why Thursday? It's probably due to some fundamental factor that I'm not aware of. I don't care why things happen. Mine is not the reason why. Mine is what to sell and buy. And that's all I want to do. So I'm not interested in the why. It's very likely that prior to the weekend, central banks change their positions, do some hedge positions, do some buying and selling depending on what they expect over the weekend. Whatever it is, doesn't matter. So I'm looking at Thursday, European currency, very specific. Let me get my pointer and show you what I mean. This day over here, and I'm going to mark it with a line, just bear with me, is a Thursday. This is the opening price. I'm sorry. This is a Thursday right over here. So that's the Thursday. That is the opening price. That is the closing price right over here. On Thursday, close greater than open. I have a buy setup. I need to trigger that buy setup, which means that I need to trade above Thursday's high on Friday. That happened over here. Yes, U.S. futures. That happened over here the next day, which is why there's a blue dot over there the computer put there as a buy. The setup, the trigger. Now I need my follow through. I have a stop. I will give you that stop shortly. The trade goes against me for a while, but is not stopped out. Then, a couple of Thursdays later, we get close greater than open again, and we get another buy trigger the next day. And by the way, it's very important for me that you understand these rules. If for any reason you do not understand these rules, let me know. I will send you the rules in plain old English and you can understand them better if you're not clear. My exit strategy. Exit on the first profitable opening. The first trade has a profitable opening right over here. The second trade has a profitable opening right over here. Both trades are closed out. Definition of a profitable opening. Any opening that is greater than the price at which you got in. That's all there is to it. You may not be happy with a one tick or one pip opening. Well, I'll give you my email address. So why don't you send it to my email address, which will be shown shortly. Okay. So the bottom line is, any opening greater than your entry is considered a profitable opening. It could happen the very next day. It could take a week or two, but that's all there is to it. Let me show you another one. Here's the sell side. This is a Thursday right over here. Close less than open. The next day we sell short on a stop below Thursday's low. We exit on the first profitable opening. Okay? Don't give me your email address here. Send it to me, to my email address, which is jake@trade-futures.com. So let me put that in for you. jake@trade-futures.com. So send it to me there. Okay, so look. Thank you, Jan. It's very, very simple, very straightforward. Let me show you a couple of things. And by the way, if you don't understand it, believe me, it's so simple, even a computer can do it. And that's why we have all the signals on the computer. And the track record that I showed you is based on what I'm doing here. This is the system that I showed you with these statistics right over here. Hold on one second. Let me show you. That is the rule-based methodology that produced this track record. And remember, this is strictly short-term. You may not be a short-term trader. You may want something bigger, something that lasts longer. I will show you. Okay, and Steve, I want you to see it working before you get excited about it, because some people may not want to be in a trade for that short a period of time, or they may not be able to handle the risk on the trade. If you have something called Genesis Trade Navigator, I can send you the rules and the system, and all you have to do is install it on your computer, and you'll be able to generate the signals. If you don't have Trade Navigator, no big deal. The rules are so completely objective, they can be programmed into any system, whether it's TradeStation or NinjaTrader or anything else. But I encourage you to look at it, try it out for yourself, look at the history before you do anything, because I want you to make sure that you like it. Okay, so let me show you something else. Friday open, what time? Friday's open is on Thursday afternoon. So because it's a 23-hour currency market, Friday's open is Thursday afternoon. Okay? Okay. So let's go to the next slide. These are the statistics. So, trading model, setup, trigger, follow through. I need a pattern, I need a trigger, I need a follow through, and if I have that, I've got everything I need. Which is not to say that it's perfect, but it is to say that it's rule-based. I'm going to show you a couple of more things that are based on setup, trigger, and follow through. Let me show you what I mean. Hang on a second, I'll go to the next slide. I'm going to show the channel system. I do not have enough time here to show the channel system, but I'll show you some other things. Okay? Okay. So these are the rules. Setup occurs Thursday in Euro currency, or Euro or Forex, if the close is greater than the open or the close is less than the open. Close greater than open is a buy setup. Close less than open is a sell setup. Friday. If we trade above Thursday's high on a buy setup by X number of pips or ticks, we have a buy trigger. If we trade below Thursday's low and Thursday is close less than open, we have a sell trigger. Is this just based on currency trading? This particular system is only for the euro currency. It is also effective in other currencies with slightly different parameters. But let me tell you something else. What do we know about traders? One of the things we know about traders is this. They don't like to buy on strength. They like to buy on weakness. Traders are always trying to get a bargain. They're always trying to buy cheaper. We know that that is not the most effective thing to do. The most effective thing to do is to buy breakouts. Because when you buy a breakout to the upside, you're getting on a train that's moving in the right direction. What an incredible concept. When you're trying to buy at support, you're buying on a train that's moving back into the station, and it may never come out of that station. So the bottom line is, breakouts work really well. And one of the things that people don't like about this particular system is that you have to buy a breakout to the upside, and you have to sell a breakout to the downside. So Joe, send it to my email address. Don't send me your email address. I don't have time to copy all that down right now. Okay? Okay, so I'll show you some more. I want to stress one more thing. If anything I'm showing you here today is unclear, send me an email. I want it to be clear. Let's look at something else. I'm going to switch gears on you. Post my email address. It's right over here, just in the text block, right up there, jake@trade-futures.com. Do you see it? Yana posted it, and maybe she'll do it again. Has this worked for stocks? This particular method is not applicable to stocks unless you're trading the ETF for the European currency, which is FXE. But then again, one moment, Cal. But then again, the risk is too large because the price of the stock is very high. This is not for the E-mini. I have another system for the E-mini. The stop loss. The stop loss on a long position and a short position in dollars depends on what size contract you're trading. For the full size contract in S&P, the stop on a long position is $3,400 US. It's $3,100 for a short position. You may say, well, gee, that's too big for me. The good news is you can trade this in an option and define your risk. You can trade the smaller size currency contract, the 1/3 size, the 1/10 size. So it's all a question of risk. If you know your risk before you get into the trade, then you've got half the battle won. Do any of your formulas work for stocks and options? I don't trade options, but my methods do work for stocks. In fact, if you just hang in there, I'm going to show you something that works extremely well for stocks. And you can do this particular method on options for those particular stocks. Let me show you. FPO means first profitable opening. That is first profitable opening. Does that clarify? Okay, so let's go forward. Oh, don't worry about it. Don't worry about it, D. There'll be plenty of time. Can we trade the Euro USD currency? Yes, this is based on the Euro USD. And it works in the Forex as well. So everything is rule-based, and this is how I look at my rules. But let's talk about something else. Let's talk about different types of setups. One of the things I want to talk to you about is what means follow-through. Follow-through is the stop loss or the profit maximizing strategy. Okay? Okay. I'm going to look at this right over here. Pre-holiday behavior. One of the best books ever written on the stock market is a book entitled The Behavior of Prices on Wall Street by Art Merrill. If you haven't read that book, you should, because it talks about very specific patterns in the stock market, patterns that most people don't know or are not aware of. One of those patterns is pre-holiday behavior. Since the 1880s, there's been a pattern in the stock market based on the Dow Jones prior to major U.S. holidays. Let's define major U.S. holidays. 4th of July, Thanksgiving, Christmas, New Year's, Easter, Good Friday, and a few others. Merrill researched the behavior of the stock market before the major holidays, and he discovered there's been a tendency for stocks to close higher on the day before a major U.S. holiday, and that probability runs on average about 75%, which means that if you buy on the close of trading the day before the major holiday, and you get out on the day before, in other words, if the holiday falls on a Wednesday. You're buying on Monday's close, you're getting out on Tuesday's close. That probability is very high, and statistically, it could not occur by chance. It could not occur by chance. More than, the probability is 1 in 10,000 times that it's going to be a chance event. The Behavior of Prices on Wall Street by Art Merrill. That's correct. Excuse me, ladies and gentlemen, I'm so sorry about this. Let me give you an example. So bear with me. Here is, hold on one second, the history of what I call the pre-Turkey Day. 62 years, oh, thank you very much. 62 years, the pre-Thanksgiving Day holiday. Thanksgiving Day falls on a Thursday. The electronic market is open, but the open outcry is closed. In order to take advantage of this trade, you would buy in the close of trading Tuesday, you'd get out of the close of trading Wednesday. It's very simple. But what I'm doing here is very simple too, because I'm giving you the odds. These are the odds. If you can't have the odds of success with any given trade that you're looking at or thinking to do, there's a problem, because you don't know whether it works or not. So let me look at another one, Good Friday. Take a look at the Good Friday trade this year. You'll see what happened. Take a look at the 4th of July trade this year. You'll see what happened. And the rule is always the same. You're buying on the close of trading the day before, and you're getting out on the close of trading the day before the holiday. If that's not crystal clear, you can clarify it in Art's book, or you can drop me a line and I'll clarify it for you. Let me change gears on you and show you something else. One of the things that I like to look at is history, because history repeats. I have here what I call a composite chart. Hold on one second. I have here a composite chart of the S&P December contract. At the bottom of the chart, I've got the weeks of the year, and in the cells I have percentage of time up or down for that particular week based on the history. And by the way, this chart came from a website called seasonaltrader.com. It's one of my websites, www.seasonaltrader.com. If I look at this chart, there's some things I see right away. One of them is this. From this period of time, end of October, until the latter part of December, I see a strong seasonal up move. Here are the odds of prices going up during these particular weeks. These arrows down show the odds of prices going down those particular weeks. That gives me a whole lot of information, but for me, that's not specific enough. I need more. What do I need? I need the trading genie. I need to know what to buy, what to sell, when to get in, when to get out. I need all of that. So can I do that? What about no arrows? No arrows means unpredictable. Unpredictable week, unpredictable week, unpredictable week. And again, I want to go back to what I said before. I want to deal with what I know, not with what I don't know. I don't want a 50-50 proposition. Anyone can throw darts. I want something that tilts the odds in my favor, and if you will go back and study history, which I will show you momentarily, you will be amazed at what you can see. The only problem is you need to believe it, and most people won't believe it. I'll show you what I mean momentarily. Let me go on to the next chart. I can take the same concept, I can drill down to a daily chart. These are the percentage odds by day. For example, on the week number 1, November the 4th, what percentage of the time has the market closed up or down compared to the previous day? Do I see a period of time where there are numerous arrows in the same direction with good odds? These are the time periods that I'm most interested in. That's what turns me on. But again, as I said before, just let me take a little drink of my hot cocoa here. This is not specific for me. I need more. What do I need? I need the trading genie. I need to know exactly when to get in, exactly when to get out. I need to know my odds. Is that doable? Well, yes, it is doable. Guess what? We can do it because we got computers. If I go to this particular location, which is one of my websites, and I use this all the time. In fact, I just used it today to make some trades. I get some very specific information, and I can do some searches. I can search on futures, I can search on stocks, and I can ask questions. Show me what percentage of time a particular stock has been up or down during a given period of time. Show me odds of success. Let me show you what I mean. If I go to the computer and I do a search and ask the question, since the 1920s, and this goes back many years as you can see, since the 1920s in the Dow Jones, has there been anything I can do in the stock market that's been right 80% of the time or more? Now mind you, I'm not talking about 5 years, I'm not talking about 10 years, I'm talking about almost 100 years. During this period of time, since the 1920s until now, have we been through several world wars, several undeclared wars? Have we been through the Great Recession? Have we been through the Great Depression? Have we been through bank failures? Have we been through everything short of an all-out depression? Well, we had an all-out depression in the 1930s. So here we have a bunch of statistics that are based on virtually every type of market environment, showing you a particular pattern. You may have seen this pattern before, but let's take a closer look at it. This chart says that if you bought the Dow Jones or Dow Jones equivalent on the close of trading October 26th, and if you had the patience to wait until the close of trading January 10th the next year, and you were willing to risk 15%, your accuracy would have been 83.5%. This would have been your average profit in Dow points, your average loss in Dow points, your percentage average profit, your percentage average loss, max consecutive winning trades, max consecutive losing trades, etc. Now, let's go all the way back to the beginning and ask a question. Does this tell you everything that I wanted the trading genie to tell me? Does it tell me whether to buy or sell? Yes. Does it tell me exactly when? Yes. The exact date. Does it tell me the exact time of day? Yes. It tells me the exact time of day because all these trades are executed on the close of trading on that day. Does it tell me the complete history? Does it tell me the average profit, the average loss? Does it tell me the stop loss? Does it tell me everything the genie wanted to know? The answer is yes. And then I can take this data and I can parse it out and look at the track record, the Dow Jones, that particular pattern from 1928 to 2012. Before I continue, I will take some questions as to what I'm showing you. I want to make sure everyone's clear on what I'm showing you. I'm not showing you 100%. I'm only showing you 83%. Any questions? Nice. Here's the nice part about it. I've been teaching this and showing this for about 25 years, and it just never ceases to amaze me how many people don't believe it. I trade GE on a 1-minute chart, and the whipsaw is insane. The drawdown will kill you with all the head fakes. So I have some advice to you, D. Ryder. Why are you doing that? Why would you want to put yourself in the position of trading something on a 1-minute chart, which to begin with is ridiculous, and put up with the head fakes? I don't do that. I'm not interested in that. The smaller the time frame, the more volatility there's going to be, and the less accuracy you're going to get. So you have to find the optimum time frame. I would never trade anything on a 1-minute chart. Besides that, it doesn't leave very much time to go to the bathroom, and that might not be too good. So I don't have any systems that trade on 1 minute. The lowest I will trade is 15 minutes. What is the drawdown? What is the drawdown on what? The drawdown on this particular method? Or the trade I'm showing you? Why is the profit 0 for so many years? You mean over here? Just one moment, Mr. Ryder, or Ms. Ryder. This is not 0. The reason it looks like zero is because this is so big. Look at the scale. If you want to see the profit, you want to go to the actual trade listing. So when I show you, this is the trade listing year by year, okay? And these are the profits or the losses right over here. So it's not zero at all, okay? It's the scale. Now what is the drawdown on which method? Are you talking about the currency method, or are you talking about this particular seasonal trade? I'll wait for your answer. On the east, okay, well, here's the drawdown. So let's go back to the track record right over here. Here's the track record on the currency trading system. And we have the drawdown. Hang on one second, I'll come right back to you. Here is the complete statistical report. The drawdown, based on one contract, is $13,000. You say, well, gee, I can't trade on that kind of drawdown. Well, then the answer is real simple. That system's not for you. Or you can trade the mini contract. The drawdown will be less. So all the statistics are right there. So let me go forward before I run out of time or before I completely run out of voice. So bear with me. I want to show you something else. And let me stress one more time. If anything I'm telling you is not clear, write me. I'm here every day trading and I will answer your questions. What does it take for you to tell us the remaining 17%? Remaining what 17% are you talking about? What does it take for you to tell us the remaining 17%? I'm not understanding that. You mean this particular system that's only 83% accurate? I can only give you 83% because that's all I got. I can't give you 100%. If I could give you 100%, I'd give it to you, believe me. Please show the stock example, okay? The stock example. Do you mean this particular listing right over here? Is that the one you want to see, Gillian? You had a stock strategy. Stock strategy. From the seasonal odds. Well, that is right over here. Okay, so if you have any questions, yeah, send me an email. But let me continue because I have a few more slides to show you before we're done. So this is the track record of the trade I just showed you. You can do this on specific stocks. Let me show you my trades for the month of July. I already know all my trades for the month of July. I know the symbol, I know the entry, I know the exit, I know the odds, I know the entry date, I know my percentage accuracy, my average loss, my average profit, my percentage average profit loss, max consecutive winners, max consecutive losers. Here is a trade that goes on today in Amgen. Buying on the close of trading the 10th of July, getting out on the close of trading the 23rd of July. I'll answer the questions in a moment. And that's all there is to it. And I can look at the individual results. So here are the individual results right over here for Amgen. Every single year that I have on file. All the way back to 1985. Now let me get your questions. Does that mean any stock bought on October 26th? No. This is specific to the Dow Jones. So, since it's specific to the Dow Jones, you would be trading the diamonds, which is the DIA, or in futures it would be the YM1, which is the $5 Dow. And in this particular case that I'm showing you here, this applies to specific stocks like the Amgen trade right over here. What were the days to buy and sell Amgen? That is right over here. Buying on the close of trading, the 10th of July. Getting out on the close of trading the 23rd of July, so you can see it's a short-term trade. Okay? The first strategy was for futures. I thought you said you had one for stocks. I may have misunderstood. I'm showing you a stock strategy right here, Gillian. Is this not a stock strategy? Okay. Do you ever use a mental stop or trailing stops or prefer? Okay. Mental stops are okay if you have the mental ability to implement a mental stop. I always use trailing stops when I have my profit maximizing strategy in place. I have not taught you the profit maximizing strategy yet. I will try to do that before the time is over. Okay? Okay, good. The meaning of growth. Growth means that this particular trade in its last cumulative profit is higher than it was 10 years ago. So I want a trade that's got good statistics, by which I mean 75% accuracy or more, as well as profit to loss ratio 4 to 1 or higher, as well as positive growth, which means it's continued to be positive. Is that completely clear? Okay. So these are my trades. There's another one today in VF Corp. How long history should we test? If I don't have at least 15 years of history, I don't have a trade for this particular method. Most of these trades will have 30 or 40 years of history. In some cases, will have 80 or 90 years of history. The more history you have, the better. Okay, let's go forward. This is not specific only to the stocks that I showed you. What is the trigger for these trades? The trigger for these trades is to enter on the closing of that day. If you want a further trigger, look at momentum. One of the best indicators is momentum. What is momentum? Also called rate of change. It's available on practically any of the software packages. If you have a buy trade and the momentum is plus, then that stock is moving in the right direction and the trade triggers. But with trades like this, where the accuracy is so high, trigger is not necessary. Do you make money with a long-term portfolio? Yes, we make money with a long-term portfolio because we trade not only day trade, not only short-term, but we trade our IRA and our defined benefit plan as well using these approaches. Okay, so let me go forward and show you something else. Look, this is the complete history of that Amgen trade that I just showed you. This is the year-by-year history. And I want to stress one more thing. This is super important, so I'm going to say it before I completely lose my voice. Are trades long or just short? Well, you tell me. Do you see any short trades over here? Here's a short in Best Buy. Here's a short in Tiffany. So there are short trades as well, okay? You don't see any short trades? You still don't see any short trades. Oh, okay, good. So let me tell you something very, very important, and that is what I call the danger zone concept. As traders, you always have to be aware of the danger zone. The danger zone means this. I am in danger of taking a loss until I reach my first profit target. I must always have a first profit target for every trade that I do. Once I reach that first profit target, I take some money off the table if I have multiple positions, or I bring up a stop to break even, or I use a trailing stop. But we need to know what that danger zone is. If you take a look at this trade in Amgen, let me show you. Looking over here, it says average profit 5.84%, which means that the average move over all of these years from the date of entry has been 5.84%. If my Amgen trade makes a profit of 5.84%, measured from the close of trading today, and notice I'm being very specific with you, I've reached my first target. Once I've reached my first target, I'm out of danger. I have no significant potential for a loss, and I take a third of my money off the table, and I trail stops on the rest of the position. So remember, for all of these trades, there's a first profit target which gets me out of danger. So if there's anything that I could teach you today, the three things that I would emphasize. Number one, use a trading model. Actually, four things. Number two, don't believe anything I tell you till you see it for yourself. Number three, always have a rule-based methodology. And number four, get out of danger. So are the earnings dates Art, the earning dates may vary each year. How can you rely on the dates for each year of trading? Well, the statistics are right here. There's nothing to rely on. You've got the history. You can go back and research this on your own if you like and see for yourself if it's true or not, if it works. So I'm not interested in earnings. If my method works, then I will know ahead of time whether the earnings will be good or not. How do your rules change for day trades or shorter term time frames? For day trades, I'm using two methods. One is what I call my open-close method, where I'm looking at the relationship between the opening and the closing price for any given bar. And number two, my second method is momentum divergence, which is discussed in some of my books. And I'm not trying to get you to buy any of my books. If you don't want to buy my books, that's fine. You can get them at the library. But momentum divergence, in my view, is one of the most powerful indicators that you can have. Also, there's some very good ways to swing trade stocks if you know the trend and you know support and resistance, not in the traditional sense with the trend line, but with what I call my moving average channel, which is also discussed in my books. Okay, let me go forward. Do you like selling puts? I don't trade options. Okay, let's go forward. Okay, hang on one second, please. I want to show you something else. Look, I'm showing you a sample of other trades. Why don't I trade options? I don't understand options really well. I mean, I know how they work. Everyone understands the basics. But for me, I've never been able to make good money in options. I like to do other things that work for me. I guess I'm just an old-fashioned guy. Yes, you can get a lot of good leverage with options, but a lot of times the premiums are not fair. A lot of times the moves are not big enough. You're dealing with time decay. I don't like any of that stuff. It's too complicated for me. But the guy who was on before me, I forgot his name, was it Mark? He sounds like he knows what he's talking about. So I'm not an options guy. No offense intended. Okay, look. Here's the same concept that I showed you before in the Qs. So you'd be trading the triple Qs for this particular seasonal trade. If you don't like the Qs, well, guess what? This is the track record, all the years of history. Here's the Dow Jones for a shorter term trade from 1950. There's the cumulative profit. And on a chart, this is what the trade looked like last year. You want to trade other methods? I've got those too because I've done all the research and it's been very clear. You want a trade that starts in November? Here's a trade that starts in November, November 20th through January the 3rd. This one's only got about 84% accuracy, so maybe it won't make you happy. How about the track record? That's the track record. How about another trade in the Dow Jones? This one starts in November, and you can review this file anytime you want. This goes all the way back to the 1920s. So let me review before I run out of time. What I've tried to do, and here's a December trade, and here's the track record of that December trade. So look, what to do. Always know your risk, always know the history, always know the entry price, the exit price, always know your profit maximizing strategy, and you can talk about scenarios, and all of these trades that I'm showing you, all these methods are optionable. Confidence comes from having a methodology of the worst, and that's based on the rules. As I see it, it's the only way to overcome psychological issues while trading. Thanks again. You're very welcome, Steve, and thanks for summarizing in a very scholarly way, in a very pithy way, what I had to say. Okay, so you have a lot of choices. There can be analyst upgrades and downgrades, legal laws, FDA. You know, AS, there can be anything. Okay? I'm not interested in the news. I use the news to my advantage. Today, for example, we had news of problems with the Portugal Bank. I used that news to be a buyer. Today we bought CSIQ, we bought Weibo, WB, and we bought JetBlue. We were already out of some of these trades at day trade profits. So that's how I like to use the news. But again, Steve, AS, if I can't convince you of this purely technical approach, then you have to use what works for you. If the news has been working for you, keep using it. Okay, we've got 3 minutes left approximately, so if you have questions for me, I'll be glad to take them now, as long as my voice holds out. And I want to apologize to everyone regarding my voice beginning to fade. And Yana, I think we had a special offer for people if they're interested in it. What made me pick CSIQ? The trend was up by definition, so I had a defined uptrend. The market traded down to my moving average channel support, so we bought it right on the open. And we are already out. Okay, I have a webinar, a series. It's going to be 6 sessions in which I'm going to teach my methods. And anyone here, you want 50% off? That's great. If you can't afford 50%, then send me an email and I'll give you a special poverty rate. But if you need the poverty rate, you probably shouldn't be trading. All right, are there any other questions? Okay, Gillian. Sorry, I don't mean to be disrespectful or anything like that. I just want to give you a good time and show you stuff that is clear and separate myself from a lot of other people who may not be clear, which is not to say their stuff doesn't work. Yeah, CSIQ is a great trending stock. It works really good buying it at support. We made some good money today. Okay, thank you very much, everyone. Anjana, am I done, or do you?
No, I tell you what, Jake, we have a few more minutes just to see if there's any last questions, but I'd like to begin by just thanking you so much for your time today and your very down-to-earth presentation and for giving us what little voice you have left today. I think your years of experience are self-evident, and I know that many of us are taking away ideas that we can use in our trading right away. And I also appreciate your openness and willingness to share and for giving us your contact information for follow-up discussions. And folks, Jake is sincere. We have published his contact information. If there's anything that's not clear about what Jake has shared with you today, please email him, get to him, and he will get back to you with answers. And also, Jake, thank you so much for the special offer that you've allowed us to extend to our members here as well.
And I want to thank you, Raleigh and Yana, for inviting me to speak here today. And I want to apologize. I don't mean to offend anybody. I'm just the guy that I am. I don't have any friends that are traders. I don't associate with traders because I have my own ideas, which is not to say that there's nothing out there that's good. There's a lot of good stuff out there. I just can't use it in my work because I'm my own person, which I encourage everyone to do. Now, let's see. There was a question about an account. You can start with the $10,000 account, but it's not going to be very easy for you. Probably $25,000 would be better. As far as my recent book is concerned, the question regarding the Complete Day Trader 2, it's way up to date and changes a lot of the things that I did many years ago, makes them more current and more effective. Is there any other questions? Give the CNBC trade. Let me tell you about the CNBC trade. There are certain people who come on CNBC, whether it's Jim Cramer or without mentioning names, who will recommend a certain stock. Most of the time, you know ahead of... Oh, is my time up? Do I need to go?
I think at this point in time, Jake, your time is up. Yeah, and what I would encourage people to do here is, once again, Jake has already offered that chapter out of his book. Just send him an email if you're interested in the CNB trade, and we'll go from that.
Yeah, I'll send it to you. Thanks again, Raleigh.